Yo, welcome back. I'm going to break down the craziest move that happened on gold chart today. I want you to take a look and tell me what exactly and how simple it is, right? Right, so this is gold's chart. You have seen my previous videos. If you have seen them, you understand what I'm going to show you. This entire move all the way from here till here, which is about 3960. It's almost like 170 point move within like I don't know, within like 2 hours, I believe, or an hour or so. If you did not catch this, you need to rethink about your choices. What am I talking about? Oh, my bad. Look, I'm gonna keep it very simple. As I told you, what are order blocks? The price pushing aggressively. You're not gonna mark this as the order block. Why? Because the price did not break any highs. We have this. Then this area was the one that started to break this exact high. Correct? We broke this high. Hold on, let me just add some. Let me make the line a bit dark. How do I do that? Kind of forgot. Right? Okay, let's do this. Uh, this is the point from where the push started and broke this high. Now, what happens is, as I told you, we have early liquidity. The market is just going to pull back. Market is going to give another push up. This is the fake order block. Why? Because this was the initial push. So we are not really concerned about the push that happened after that. That is the second range. You can literally see that all this is basically liquidity buildup. You can see let me just use this. You can see all this is liquidity buildup. People buying here, putting the stops here. People buying here, putting the stops here. You see the market is continuously, you see below this low, the market comes, sweeps it, then the market creates another, market creates this high, goes on, sweeps it, comes all the way back down, sweeps the buyers again, and then starts to dump, right? Starts to create this trend line liquidity. I want you to pay attention what I'm saying, because this is basically gold mine. Then what happens is, you can't tell me this is coincident, right? The market dumps all the way to the fake zone, gives a reaction of 20, almost like 15 to 20 points, and then goes and sweeps these buyers because they had the stops here. And exactly what happens is, market gets fake push up over here. Let's get rid of these drawings. The market creates this fake push up here, here. This fake push up, you can see, if I just close up on this chart, you can see here exactly the market broke the previous high. The market gave you a beautiful fair value gap over here. Not bad. The market gave you a beautiful gap on the first and the third candles wick, and then actually gave you a reaction too. So a lot of people are getting into longs like this. Oh, let's target the drawn liquidity, which is basically these highs. What happens? Boom, they get stopped out. You see, they get stopped out. Why? Because we need to understand that this is the zone that had the most amount of pressure of buying that broke the structure. This zone, not this zone. We're talking about this zone. This is called the inducement zone. This is all early liquidity. So what happens here? You can see in this order block, 5 minutes, the price comes. If you want to define this, we can actually define it a bit somewhat like this. Okay, the price comes in. Now what exactly are we looking? We are looking for our entry trigger. We come on down to the 1 minute. Okay, price comes down, doesn't break up. We need something of breaking this up, because this was the impulse down move that took out all these lows. Focus. Impulse down move that took out all the liquidity. Boom. Now you might tell me, oh, we could have entered here. Yes, you can just, if you want to be aggressive, you can just take your entry right here, put your stops all the way down. That would be almost like, I think 5, 6, 7, 9 to 10 points of stop loss. Okay, that is fine too. But if you want to be more of trying to snipe the entry, this is the high that broke. That this is the high. This is the point from where the market started sweeping all these lows. We go down, we come up, we go down, still waiting. We go down, we sweep we do this little sweep again. We come up. I mean, you could have taken this entry because this was basically the last resort. But I don't want to be like, oh, one of those guys that are just going to, go against the rules. No. Then what happens? We are basically in this consolidating zone, right? You can see here. What do we get here? Wow, we get a candle close above. We get a candle close below this high, or you can say this high or this high. I mean, we are not targeting these high. This was the last high before the impulse move. You see this? And what exactly do we leave here? We leave these imbalances. We can take the trades from the imbalance. It's up to you how you want to trade, right? What happens here exactly? We have this tap. Just try to understand. You see an order block, you see the tap on the order block. The first tap is basically the fake one. You wait for that to get swept. You look for a market structure shift or a break of structure to the upside. You look for a fair value gap or an order block. Basic shit that I'm doing, right? You have this extreme order block right here. Okay. And then you also have the fib range. I'm going to draw from the swing low all the way to the swing high. And wow, look at that. What a coincidence, right? We have this 50% of the fib. Look how precise I'm talking. If this was your first entry on the 50% of the fib, 50% on the fib, and let's say this was your stop. Why? Because we have this zone from where we can actually reverse as well. I mean, push towards the upside. We have that as well. Literally, if you took this entry with only 2 points of stop loss and you basically aimed for this high. How much is that? That is 1:46. 1:46 trade. And when did it happen? You waited the entire week for this shitty price action to sweep because, as I told you, every reversal starts with a sweep. If there is no sweep, there is no. You can see there is all this liquidity was taken by this sweep. And then once the sweep was done, the market pushed up. And then it comes back to give the real move. Like, how simple is that? You just wait for the liquidity. This is Wednesday. We have this Thursday. You see the push up came in. We still got this good move up. So this could have been one of the trades that you could have taken, putting your stops all the way below. Why? Because you can see this low was taken by this liquidity right here, this sweep here. So now we know we have the liquidity sweep. We have this big push up. We have a very, very, very clean demand zone from where the price started to push up, and you could have taken this trade all the way to these highs. Oh my God, this high did not get touched. Or you can just take partials here. Who knows? You won't be too happy if your trade just reverses after 1:6, right? You could have taken this trade. Now the same thing happened here. Look at this. Look at the pattern, right? Wednesday, Thursday. Today it happened on Tuesday and Wednesday. You could have caught this entire move all the way to maybe these highs as well. Now look at that. That's 1:62. This is the most clean explanation of how you could have caught. Now you might ask me, what are my fib settings? So I basically have these are my fib settings that if you want to copy. And then I also have standard deviation, which is BSTDV right here. This is to know the manipulation legs, MAC expansion, and reversal zones. So these are the settings for that. Feel free to take a screenshot and use them. What else do I have? I also have here the template of BOTD basically stands for black OTE and black STDV because I have them in black color. You can see this. I will explain the concept of OTE as well, which is optimal trade entry. You want to get the best entries possible depending on the way the price is moving. So simple trade. You can literally see this is like clean textbook setup. Order block, early buyers getting chooped, buying here, stopped out, buying here, stopped out. And there is something called the build up. Yeah, you can see we have this beautiful build up of liquidity. Then we have this strong manipulation move down in this gray box. And then when every seller is trapped here, because if you open the 15 minutes, a lot of people might have drawn this as the support. Oh, it's breaking. Let's take a short position here, put our stops on this high, and they basically just got ran through by the market. Ran through by the market. Very simple and clean moves. So thank you for watching. I hope you learned something from this lesson.